Breakout is one of the most simple strategies that can give you 90% accuracy. But the problem is most beginners or even advanced traders don't know how to use this strategy to identify big moves in the market. In this video, I'll show you how to use this strategy to make over 90% winning rate. Don't be deceived by many. No strategy works 100% all the time, but there are some strategies that can give you 80-90% winning rate if you do it the right way. This breakout strategy is one of these strategies that can give you 90% winning rate if you trade it wisely. In this video, I'll show you all the necessary things you need to start trading breakout strategy, and also I will reveal something you need to know before you trade breakout strategy to avoid fake outs. Fake outs occurs many times during breakouts, and I will tell you how to avoid these fake outs. So make sure you watch this video to the end so you don't miss any part. Without further ado, let's jump in. But before we do, I'm James Merige. I'm a gold trader and I want to teach people how to trade gold like a pro. So if you want to be a profitable trader, make sure you click the subscribe button, turn on the notification bell, and like this video so you can get notified whenever we drop a new video like this. And also, if you want to get free PDFs and free trading guides, make sure you join our community to learn more trading guides and get more free PDFs that can help you become profitable. Now, without further ado, let's jump in. For you to trade XAUUSD using breakout strategy, you need a good knowledge about top-down analysis. Top-down analysis is where you approach the market from the higher time frame, like from the 1 week time frame, monthly time frame, 4 hours time frame, or daily time frame. The main purpose for this is to identify what the bigger guys are doing. Then you come to the lower time frame to know how to follow the market and make big profit. So for you to be good at top-down analysis, you also have to ask yourself a question: which trader type I am? If you're a swing trader, then you have to start from the weekly time frame, daily time frame, and 1 hour time frame for entry. If you're a day trader, you have to start from daily or 4 hours time frame, then you go to 1 hour time frame, then 15 minutes time frame for entry. If you're a scalper, you have to start from the 1 hour time frame, 15 minutes time frame, then you go down to 1 minute time frame for entry. Me, I am a day trader. So in this video, I'm going to show you how to use top-down analysis to trade breakout strategy accurately like a pro. So now we are going to start from daily time frame to do good top-down analysis before we move to 1 hour 15 minutes time frame to find correct entry. Trust me, this is the best video you will watch, and if you watch this video to the end, you'll be able to identify big moves in the market. The purpose of doing top-down analysis is to know whether the market is trending up, trending down, that is downtrend, or consolidating. If the market is trending up, then you find a way to follow the market and start going up. If the market is trending down, then you find a way to keep selling and following the market to keep going down. And before we go further, trend lines is one of the tools we use to mark out where the market is consolidating. So you can draw trend line by picking 2 points in the market, example higher high or lower highs, and you can also draw a trend line as a channel. In this video, we are going to discuss all these things one by one. First, let's see how to draw trend line in uptrend, downtrend, and consolidating market. For you to trade breakout strategy accurately, you need to know the difference between uptrend, downtrend, and consolidating market, and also learn how to draw trend lines through them. Okay, so now if you see the market creating stress of highs, it means the market is trending up. For example, if market creates a high, then make a low, then break the previous high, then create another low, then break the previous high again and create another low. That means the market is trending up. Okay, so if you see this market, first of all, for you to draw trend line here, remember we use trend line for trading breakouts. Okay, so for you to draw trend line, you have to pick this high, and this high, and also pick this low, and pick this low, for example. So first of all, pick this high, and pick this high. Okay, so now you have a resistance trend line, and you can also draw the trend line by picking this low, connecting it with this one, and making it and stretching it to this one. So the purpose of this is to know supply and demand zones. Okay, so whenever the markets approach here, you buy. Whenever the markets approach here, you buy. Whenever the markets approach here, you also buy. But here we are studying breakout strategy. Okay, now what if the market breaks throughout this trend line? How do you jump in and make big profit? For example, if the market just decide to break this trend line, what will happen? Will it continue to go down or will it start to go up? Okay, so that's what we are going to study in this video. And also if the market is creating stress of low and high, then breaking the low again, creating another high, breaking the low again, it means we are in downtrend. So what you have to do is to connect this high and high, then low, 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 and make trend line exam like this one. Okay, so remember how we did this one, you can also do it exactly this way. So all you have to do for damn trends, you draw your trend line by connecting the lower highs, that is this one and this one. Okay, and you can also stretch it so that whenever the market touches the trend line again, you buy. But what if the market breaks the trend line? Okay, how will you make money from it? And that is what we are going to study in this video. So now you understand that this one is uptrend and this one is downtrend. But what if the market is consolidating? What does it mean and how do you trade it? If the market is consolidating, it means we have something like this. The market can create a low, then create a high. Coming back, it will be unable to break this low. It can stop here, and going up again, it will be unable again to break this high. Okay, it can stop here, and coming down again, the same thing will happen. It will be unable to break the low. Going up again, the same thing will happen. It will be unable to break this high. So this we have consolidating markets. That means you can draw your trend line by connecting this high, high, and high. Okay, and also you can do the same thing by connecting the low, low, and low. What it means that whenever the market breaks this upper trend line, it means we have a breakout. So how do you trade it? And whenever the market breaks this low, it means we have breakouts. So how do you trade it? So this video have all the answers. Okay, so make sure you watch this video to the end to know how to do top-down analysis and also to find a way to trade breakout strategy. Now over to top-down analysis. Remember, the purpose of doing top-down analysis is to identify strong key levels and to know what the big institutions are doing so you can find a way to follow them. Okay, so when doing your top-down analysis, you should pay close attention to what the market is doing and also to mark out key levels. I don't want to make this video very long, so I will summarize things here. So looking at the 1-day chart on XAUUSD, that is gold, you can see that on daily basis gold is trending up. So all you have to do at this daily chart is to mark out key levels. Here we have this key level. Okay, so you mark it out. You can also mark out this key level. Anywhere you see the charts rejected and dropped, you should mark it out. So when you mark it out, just remember that it is on daily chart. But the most important thing on daily charts is to know what the big institutions are doing on daily basis. As you can see on daily basis, the big institutions, the big guys are buying. So this is uptrend. So we move to 4 hours time frame. So on this 4 hours time frame, you can also see that the chart is creating series of highs. Okay, so here we have high, then a pullback, a high and a pullback, a high and a pullback, a high and a pullback. Remember what I told you about this chart? It means what? Uptrend. And you can draw your trend line from here, collecting it to here. So anytime the price touches here, you buy. So understanding that this is uptrend, okay, on this 4 hours time frame, the next thing is now to find out key levels. Okay, you can use your trend line to find out key levels, and you can also use your horizontal lines to find out key levels. Now looking at this place, you can see the price touched this and came down, touched it again and came down, then went up after breaking it, came back and touched it and went up again. Now the price is back to that level. So we are going to find the reason why the price came down to this level and how we could have caught this big move. Okay, so we are going to know what happened before this big move occurred and how we could have caught this big move and make insane profit. Okay, so the first thing you have to do on this daily 4 hours chart is to draw your trend lines. You can draw your trend line collecting this low, this low, and this low. Okay, so you stretch it upward so that anytime the market touches it, you will know that this place is a key level. And also you can draw horizontal line from here to here so that you know when to exit and when to take profit. Okay, the purpose of finding key levels is to know when the price will react and when possible price trend continuation may occur. So knowing that we are on 4 hours time frame, we are on uptrend, and marking out key, after marking out key levels on this 4 hours time frame, we go down to 1 hour time frame. So this is 1 hour time frame. Remember, assuming that this is a live market and we want to know what happened before this big move occurred, and how we could have caught this big move. That is what we are going to understand, okay? And how we could have put and ended up here, and how we could have put our entry here, and what will happen, and how we could have made everything and make insane profit. Okay, just keep watching and you will understand everything. So on this 4 hours chart, we can see closely that the market is trending up. Okay, and look at it, touched here, came back on 1 hour time frame, touched here, came back on this, and after moving up, it came down to this level, went up again. Okay, so knowing this, remember we mark out this level on 4 hours time frame as our key level. Okay, so I'm going to drop horizontal line here so that we can use it to remember it anytime the market comes back to it, or we can use it to know when to exit our trade. Now I'll drop horizontal line there. Remember, you can still use trend line, but whatever one you use, it is fine. Okay, so now on this 4 hours chart, you can see, remember, you want to know what happened before this big move happened, so we are going to consider only this one on this 1 hour chart. So we know how we could have caught this big move and make insane profits. Okay, now see the charts, the price action we are going to pay attention here is this particular one. Okay, so as you can see from this place, first we have a touch here, a touch here, and a touch here, and a touch here, and a touch here. Okay, you can use your trend line to mark out, to connect these touches, so that it will be like a channel. Remember what I told you about this. Okay, you can draw a trend line like this, you can also draw it like this. Okay, so that anytime the market touches here, you buy. But if the market breaks it, you know that this is breakout, and how you are going to trade it is what we are going to learn now. Okay, so we know that the market have a touch here. Now we know that the market have a touch here, have a touch here. Now we are going to use our trend line to connect these touches. Now using your trend line, just drop your trend line here and collect the touch here, or you can also drop it here and connect it to this one. Whatever one you do, just understand that you have to pick at least 2 points. Okay, so let's collect this low, okay, and stretch it. Okay, and remember we also have a touch here and also have a touch here. We are going to drop our trend line there as well. Now connect this touch to this touch and stretch it. Okay, so we are going to go to 15 minutes time frame to know exactly, to see it clearly and know how we could have caught our best entry and catch this big move. Okay, so now if we move to 15 minutes time frame, as you can see from this 15 minutes time frame, the market has touched the uptrend line and came down, touched the uptrend line and came down. So this downtrend line is acting as a support, and this uptrend line is acting as a resistance. Okay, so what you have to understand here is that the market moves in waves, and since we are in uptrend, that means if the market breaks below this trend line, that could mean a possible trend reversal. But if the market breaks above this trend line, that could mean the buying pressure is increasing much, and that means that the uptrend will continue. But as you can see here, we have a breakout at this level. Okay, so a breakout at this level. So if you want to trade breakouts, once you get a clear breakout like this one, once you get a clear breakout, see this big red candle broke out immediately. But as you can see, when the market break the trend line, it went back to test that particular trend line. So if you want to avoid unnecessary losses in the market, whenever you see a breakout, whether in uptrend, in downtrend, in support level, in resistance level, if you don't want to have unnecessary losses, expect retests to that particular key level. Okay, as you can see, this trend line is acting as a key level. Okay, so it is a support. When the market broke it, it went back to retest it. So after a clear retest, if you want to trade like a pro, after a clear retest, once you see a clear retest, enter the market immediately after the retests have happened and place your stop loss above the retests, and your TP should be the key level you mark out. I repeat, whenever you receive a breakout, don't expect the market to keep dropping immediately. The market most times we do fake outs. Okay, so if you don't want to avoid these fake outs, expect real retests, because sometimes what the market does is, if market break out, markets will fake people out and start going up. Okay, so if you don't want to have this fake out, you have to wait for the test to happen. Okay, so once the test happens, you will understand that this is a good breakout, because without retest it may likely be a bad breakout, or people will get faked out. And as you can see here, this happened on Friday. As you can see, the market broke out here and tested. After a clear test, just enter immediately after the clear test. So stop loss should be above the test, and your TP should be the key level you marked out. Remember, if we go back to 1 hour time frame, you remember this key level that we marked out. Okay, that should be your TP. Okay, that should be where you should place your TP. You can also use this example in downtrend and also in consolidating markets. Just go to the higher time frame to mark out key levels. Once you get a breakout, expect a retest, but don't get me wrong, sometimes the market will just break out. And start moving, but sometimes it comes with fake outs. And if you don't want to have unnecessary losses, avoid entering without retesting. Okay, so that is it for now. If you have a question, make sure you drop it in the comment box. You have learned how to do top-down analysis and how to trade using breakout strategy. But you have to understand that breakouts sometimes comes with fake outs. So whenever you see a breakout, always wait for correct retests before you jump in and start riding with the market. That is one of the problems most people make. Whenever they see a breakout, they start buying, they start selling, but that is wrong. Always wait for retests before jumping in. And don't get me wrong, sometimes the market can break out and start going down or moving up straight forward without retesting. But to avoid unnecessary losses in trading, always wait for retest when trading breakout strategy. Also, you have to understand that strategy alone cannot make you profitable. You need proper risk management and good psychology. So don't be deceived by many. No strategy can give you 100% winning rate, but some strategy like breakout can give you 80-90% accuracy if you do it the right way. So don't forget to get free PDF in our Telegram channel using the link in the description of this video. For now, don't forget to subscribe, turn on the notification bell so you can get notified whenever I drop a new video like this. Don't forget to drop your question in the comment box. For now, see you at the top. Bye.